Start by breaking down the essential steps to compute your personal tax liability in Malaysia. First, you need to determine your total income from all sources, such as employment or business. Next, deduct allowable expenses and approved donations to arrive at your aggregate income. From there, subtract personal reliefs. These are specific deductions like EPF contributions, insurance premiums, and lifestyle expenses. The result is your chargeable income. Then, apply the progressive tax rates to calculate your gross tax payable. Finally, subtract any eligible tax rebates or zakat payments to find your final tax liability. This systematic approach ensures you only pay what's necessary, making the process clear and manageable for everyone. Now let's look at a practical example for a single taxpayer. Imagine you earn RM60000 from employment. After accounting for EPF contributions, life and medical insurance, education fees, and lifestyle expenses, your total reliefs amount to RM24000. This brings your chargeable income down to RM36000. Applying Malaysia's progressive tax rates, you'll pay 6% on the first RM35000 and 11% on the next RM1000, totaling RM2210 before rebates. If you've paid zakat, say RM500, this is deducted as a rebate, reducing your final tax payable to RM1710. This example shows how each step in relief directly impacts your tax bill, making it crucial to claim all eligible deduction. Let's move on to a more complex scenario: a married taxpayer with a spouse and one child. Suppose your employment income is RM80000. You're eligible for additional reliefs including spouse and child relief, EPF and insurance, medical expenses for parents, and lifestyle expenses, totaling RM29000. This reduces your chargeable income to RM51000. Applying the progressive tax rates, you pay 6% on the first RM35000, 11% on the next RM15000, and 19% on the remaining RM1000, resulting in a total tax of RM3940 before rebates. If you've paid zakat of RM1200, this is deducted, bringing your final tax liability to RM2740. This example highlights how family status and eligible reliefs can significantly lower your tax. Wrap up, let's review some key notes in the summary formula for Malaysian personal tax. Reliefs are deducted from your total income, directly reducing your chargeable income. Malaysia's progressive tax rates ensure fairness, with higher incomes taxed at higher rates. Rebates, including zakat for Muslims, are subtracted from your tax payable, further lowering your final bill. Final tax you owe is calculated as final tax payable equals total income minus reliefs, multiplied by the tax rate minus any rebates. Remember, claiming all eligible reliefs and rebates is the best way to minimize your tax legally. Understanding these steps empowers you to manage your tax efficiently and avoid overpaying.